Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
All right, good evening everyone. Hello everyone. Today is Friday, February 27th. I'm analyst Jang Jitta. First, can everyone check if you can hear me and see the video clearly? If both the audio and video are working fine, please type a 1 in the chat to let me know. So everyone, please test your audio and video, and if everything's good, leave a 1. Today is February 27th, and it's still the 2/28 holiday weekend, but we're here online doing a live stream with everyone. All right, great. I see some people have already typed a 1, so it looks like the audio and video are working fine. Hello again, everyone. In a moment, we'll get ready to start today's live stream content. So did anyone from class 2 go out? It's another long holiday. I'm not sure if you all went out to have some fun. All right, let me greet everyone first. For those of you online, if you can hear me, please type a 1. If you've done that, we're ready to get started. Good evening to Mei Daisy, and who else is online? Also, hello to Alvin Chan, Brother Yu Lin, Flying Fish, nice to see you, and Alice Fu, as well as K. Coco Lee, good evening. Caesar, good evening to you too. Alice F. and Lewis Young, hello to all of you. Good evening to Michelin as well, and good evening to S.Y. Liu, hello to you. Also, Sen Yi San, hello, and Brian, that's B-R-Y-A. Is that Brian 7691? Hello to you too, haha, okay. Alright, someone said that 2280 didn't go out. What a shame. If I didn't have to live stream today, I probably would have planned a 3-day trip. I was originally thinking of spending 3 days going to that place in northern Taipei, in Taoyuan Fuxing, like Lala Mountain, the Lala Mountain Forest Recreation Area. Sometimes you can see the whole mountain covered in cherry blossoms there. I was planning to go this week, but it just so happens I have a live stream today. Maybe I'll wait until next week to see. Alright, Stanley, good night. Good night, Stanley. Thanks for all your hard work, everyone. On 228, you still have to listen to Teacher Jin rambling about the market. Okay, so if everyone has set their positions, then that's our main investment focus for today. Of course, if you have any investment questions, leave me a message at Wanli. If I don't have time to answer them, I'll follow up with everyone in the next class. Also, just a quick reminder, yesterday I think a student left a question on the message board, someone named Cow. He asked about things like the development trends of cryptocurrencies, as well as issues related to the Trump family and the upcoming US-China negotiations at the end of March. Will it be different from before? Since there were quite a few questions, 3 in total, I spent some time this afternoon responding directly. On the message board for yesterday's show, if you check it out, you'll see I replied to all 3 questions. So if you're interested, or if your question was among them, you can take a look for reference. My responses cover things like Trump, the US-China trade war, and other related topics. Just some brief answers for everyone. Alright, okay, let's get started with today's live stream. Hey, thanks, good evening. So the first topic today is about the main focus, policy proposals being rolled out one by one, and some solid progress from 0 to 1. As we get closer to the US midterm elections, you'll notice a lot of Trump's policy proposals are being brought to the table one after another. Whether it's about people's livelihoods, the economy, inflation, or trade negotiations, all of these will gradually be put forward. This includes what I'll be adding later about the US-China trade war, and even aspects like geopolitical risks. Many countries are willing to give Trump some face, especially since he's focusing on the upcoming elections. Now, when I talk about solid progress from 0 to 1, I'm referring specifically to the area of geopolitical risks, especially the negotiations between the US and Iran. In the previous 3rd round of talks in Geneva, there seemed to be some signs of progress. So what exactly are these signs of progress? Will oil prices go up or down in the future? And regarding this, if there's positive progress, will that give Trump a boost in the election? That's actually the main theme for today. First, we'll talk about some of the concrete policy details. The second focus will be on the industry side. As you know, Nvidia's earnings report yesterday was outstanding, truly impressive, even better than expected. But at the same time, we want to remind everyone to watch out for the situation where good news is already priced in, and the stock opens high but then drops. In fact, the downward pressure yesterday was stronger than expected. So, with such a great earnings report, with Nvidia being a top performer, why did the stock price open high and then fall, dropping nearly a percentage point yesterday? So, who's shorting it? If you're bearish on Nvidia or on the AI leaders or even on the whole AI trend, does that mean it's all just going to come to a sudden halt? We'll chat about all of that in a bit. Another piece of industry news is about the Cheng Yao-Jin merger and acquisition case. Cheng Yao-Jin, as we call it, refers to remember earlier when Warner Brothers made a move to form an alliance? Netflix and Paramount both made offers, but now, who ended up winning? The answer is Paramount. So what kind of terms did Paramount propose? And how did Paramount manage to beat Warner Brothers? Why is this connected to Trump's election campaign? This is something everyone should pay close attention to. Alright, first let's take a look at today's data. Tonight at 9:30 p.m., we're watching the US Producer Price Index for January. The monthly rate, previously 0.5%, is expected to drop to 0.3% as forecasted. The yearly rate, previously 3%, is expected to fall to 2.6%. We'll track the 9:30 release together. As for the core PPI, both the monthly and yearly rates, core here means it excludes items with more volatile prices like food and energy, so it's kind of like a pure chicken soup version. For the core PPI monthly rate, the previous value was 0.7%, and it's expected to drop to 0.3%. For the yearly rate, the previous value was 3.3%, and the forecast is 3%. Looking at these forecasts and previous values, it seems like inflation is still under control, and there's even hope that it's cooling down further. If inflation continues to cool down and the stickier parts are resolved and drop further, then it's still reasonable to expect that the Fed might cut interest rates again in the second half of this year. Also, at 10:45 p.m., you can keep an eye on the Chicago PMI for February. The previous value is 54 and the forecast is 52.1. As long as this number stays above 50, it indicates the economy is still in expansion mode. Finally, at 11 p.m., there's the construction spending monthly rate for December. The previous value was 0.5 and the forecast is 0.3. You can just take this data as neutral since after all it's for December, so it doesn't have much impact on the overall market. So at 9:30, let's just focus on the PPI and core PPI monthly and yearly rates. That'll be enough. Alright, good evening to everyone at work and also to Peter Song, and Kang, good evening. Someone on stage asked, Mr. Zhang, the semiconductor index dropped yesterday because of Micron. Is this an emotional reaction? Do we need to sell half of our holdings? But with the news, I'm not sure what to do. Actually, as we've discussed before, every time the market rises and breaks through a previous high, you need to take partial profits in stages. You don't have to sell everything, but it's fine to adjust part of your position. Sell a third, sell a half, that's all okay. You shouldn't wait until the market drops to sell. When it's dropping, that's usually a good time to buy. As long as the moving average hasn't been broken, a dip is often a great buying opportunity. So actually, you need to do the opposite of what feels natural. Like we talked about yesterday, the stock market is really a place that goes against human nature. Every time there's a big rally, every time the market surges or hits new highs, people are always reluctant to sell. But in reality, that's when you should be selling off some of your profitable positions in batches. On the flip side, when good stocks are hit by some non-fundamental bad news, or even systemic risks that cause them to drop, you need to think the other way around. If there are great companies with outstanding fundamentals, and now they've pulled back to a support level or to the moving average, shouldn't you be doing the opposite? When everyone else is scared, that's when you should be looking for opportunities. So the stock market itself is the place that goes against human nature. When prices fall, everyone gets scared. But what you should be thinking is which stocks are worth buying on the dip, okay? Instead of waiting for the drop and then wondering when you should cut your position or sell, by that time, it's often already too late. So I still recommend that everyone, whether it's like the question Kaiser just asked about Micron or like before, like when he bought SanDisk or WD and a lot of Kioxia, Japanese Kioxia stocks. There are a lot of these semiconductor or memory companies. Recently, they've all been rising really strongly. But you have to remember one thing. When stocks surge like this, there's always the risk that they've gone up too much. There's nothing wrong with its fundamentals, and the trend is still good. It's still bullish, but I think it's important to take some profits when prices are high. This is something you always need to remind and warn yourself about whenever you're trading. So that's a simple answer to Caesar's question. Now, moving on to what officials have been saying lately. To add a bit about Goolsbee, he doesn't have a voting seat this year. But why did we see the 10-year yield, or the terminal rate, slightly drop below 4% today? A big reason is that some officials have made more dovish comments. Dovish remarks generally lean toward rate cuts. For example, Goolsbee said that his forecast for this year he said that any action would probably happen later this year, not right after the new Fed chair takes office in May. He predicted that later this year there could be multiple rate cuts, but he doesn't want to see inflation pick up again. He said that acting too early before inflation is eased could help prevent the economy from overheating. So overall, he's fairly optimistic about rate cuts, but he's not in a rush to do it in the first half of this year. Based on this, we're still predicting that there will likely be a rate cut in the second half of the year, probably before the midterm elections. Also, there's another major dove, who is known for being close to Trump, board member Milan. As for Ms. Milan, she said that January's employment numbers were strong. We know that non-farm payrolls in January reached 130,000, which was higher than both market expectations and the previous figure, a pretty strong jobs report. But she also said that even though employment is strong right now, especially in January, the Fed should still cut rates 4 times this year, bringing the rate down to 1%. In other words, she's calling for a total cut of 1 percentage point or 4 rate cuts. She believes that even though the labor market was strong in January, there are still risks in the labor market, so she's not necessarily saying that inflation's the main problem right now. They don't think so. Okay? So overall, whether it's Milan or Goolsbee, the two officials who are more on the dovish side, they're both telling everyone that there should be more rate cuts in the second half of this year. Just a reminder to everyone, most officials are still pretty divided on the idea of rate cuts. About half lean toward keeping rates unchanged, and the other half lean toward cutting rates. But right now, there are no committee members who support raising rates. That's for sure. At the moment, no one supports a rate hike. The only difference is whether or not to cut. It's a choice between cutting or holding rates. We expect this in the second half of the year, likely after June. While March should see no change, a cut is more probable later, according to Taiwan officials. Trump has a lot of policies, and he'll be rolling out more and more substantial ones. There are a lot of things everyone should pay attention to. For example, here's one that I want to mention. So in the US, Fannie Mae is about to announce the 30-year mortgage rate. This announcement is more symbolic than substantial, but the rate has dropped below 6%. This could have some impact on spring home sales and might actually help. The 30-year mortgage rate has dropped to 5.98%. Last week it was 6.01%, and today it's down to 5.98%. At least it's broken through the 6% mark. So at this same time last year, the mortgage rate was as high as nearly 6.76%, almost 7%. You might say, well, teacher, going from 6.76% down to 6% doesn't seem like a big deal. But actually, going from 6.76% last year to 6% now is almost a 10% drop. That's almost a 10% drop. To put it in real life terms for us, if your monthly mortgage payment used to be 100,000 yuan, then this month, compared to the same month last year when you paid 100,000, now you only need to pay 90,000. That's what it means, because there's 10% less interest pressure, 10% less interest, so the burden is lighter. So it does somewhat ease the pressure of paying a mortgage. Of course, this kind of thing will, to some extent, improve people's feelings about daily necessities, inflation, and even the general public sentiment. If you remember, last year, this was when Trump demanded that Fannie Mae and Freddie Mac, the two big mortgage companies, make large-scale purchases. So how much are we talking about today? Is it $200 billion or is it $20 billion? Anyway, it's a huge amount being used to buy MBS, which are mortgage-backed securities. Why? Because at that time, the Federal Reserve kept refusing to lower interest rates, so Trump demanded that the two agencies directly buy MBS. Now, the act of buying MBS is essentially injecting money into the market. So, in effect, it's like a rate cut. It gives the market a sense of looser monetary conditions. So, we can see that the 30-year mortgage rate, which was 6.76% last year, has actually dropped to 5.98% now. This gives his campaign a little bit of a boost, and it helps Trump's public approval just a bit. Because, after all, this mortgage interest rate has dropped by 10% from last year to now, which is also helpful. Hey Series RN, good evening, good night. Also, over at China's Ministry of Commerce, we can see that the next round of US-China negotiations, the 6th round, is expected to take place at the end of March or the beginning of April, before the Qingming Festival. Alright, so what about China's Ministry of Commerce? Today they basically said that they're willing to have equal negotiations with the US side to uphold the agreements between the two countries' leaders and all that blah blah blah. They mentioned that there were talks previously in Busan, South Korea, and then again on February 4th. As for their consensus, it's actually pretty simple. There won't be a trade war this year. Their agreement is that there won't be a trade war before the end of October this year. This is basically a done deal. It's pretty much already set, because the end of October is right before November, and this year the US has its midterm elections, right? So before the end of October, there definitely won't be a trade war, and there won't be any new tariffs or any weird moves. This is kind of an unspoken agreement between China and the US. Don't mess with my election, or else we'll see what happens. That's pretty much it. In fact, last year, Trump and Xi Jinping had already agreed that until the end of October 2026, we'll just keep things as they are, maintain the current tariffs. The situation stays the same. We're not going to add or remove anything. Basically, just don't start a trade war for now. So both sides have this understanding. Okay, so what does this mean for both sides? So when you ask if the sixth round of negotiations will be more positive, I think it will be. It's likely to be more positive. And from Trump's perspective, I don't think he'll be as sharp or as tough, because after all, there's an election this year. That's a very, very real issue. If he wants to run a good campaign, if he wants higher poll numbers, he can't stir up too much stuff. The more complicated things get, the more people's approval will drop. And with the Republican midterm elections at the end of this year, he'll be under a lot of pressure from within his own party. In other words, the Republican Party will be putting a lot of pressure on Trump. You need to pay a bit more attention to that. When asked about the outlook for Chinese concept stocks in the US, I think it really depends on which stock you're talking about. If you're just looking for Chinese concept stocks, honestly, it might be faster to just invest directly in Hong Kong stocks, just being straightforward here. As for the US, it's probably better to focus on tech stocks. Anything related to AI is going to be more profitable, of course. Whether Chinese concept stocks are good or not still depends on whether there's any real progress in this round of the US-China talks. I think this second round of negotiations will probably lean more positive, so the downside risk should be more limited. You can keep an eye on both US-listed Chinese stocks and just regular Hong Kong/China stocks, but I'd say for the US, keep things separate. I think just buying pure US tech stocks is going to be more profitable. That's an extra note from China's Ministry of Commerce. Now, due to time constraints, let's look at today's rate dropping to 3.99, with the terminal rate at 3.05, breaking below 4. Of course, that's because of the earlier dovish comments from Millen and Gooseby. As for rate cuts, the market is now pricing in about 2.3 times. Looking at the US dollar, it dips slightly by 0.11%, but overall, it's still in a weak, choppy pattern. As long as it hasn't broken above the 200-day moving average, the dollar remains on the weaker side, still pretty weak. But even so, will it keep dropping and break new lows? In the short term, I don't think it has that momentum. The chances of it breaking new lows soon aren't high, but at the same time, it doesn't look like it's going to make a strong upward move either. So all we can really say is that it's staying in a weak sideways consolidation pattern. As for the geopolitical risks, actually today's geopolitical risks are actually a plus for Trump's policies. They're actually a boost. You can see it now. Since Trump is running for election, whether it's China, Israel and Hamas, Ukraine and Russia, or even Iran, it all ties back to that. More or less, all these countries are still giving Trump some face. They're not going to stir up trouble recklessly, because if they do cause trouble, they'll have to face something after the November election, which is what we call settling scores after the harvest. Basically, if you mess around now while I'm running for election and you don't cooperate with me so I can deliver some policy wins, then after the election, you'll have to answer for it. If I'm trying to deliver some good achievements and you insist on causing trouble, making it so I might not get elected, or causing the Republican Party to suddenly lose a lot of seats in the House or Senate, then after the November election, no matter what, I'll still be president, right? Trump will still have 3 more years. So for those countries, just wait and see. When the time comes, I'll settle the score. But if you at least keep an eye on the situation and act accordingly, you guys know what's up, right? You know I'm running for election now, so at least give me a little face, let me save some dignity, don't go head to head with me. After the election, maybe we can all negotiate more easily. I think there's this kind of unspoken understanding under the table between countries. There really is, including Taiwan, Japan, and South Korea. Just look at what happened recently. Didn't the US Supreme Court just rule that using IEEPA was illegal? Trump used IEEPA to impose penalties, which was illegal, and then Trump immediately said, okay, if that's illegal, then I'll start using Section 232, 301, or 122 to impose global reciprocal tariffs. He raised them to 15%. You see, he raised them to 10%, then to 45%. Which country said no? No country dared to say no, right? Even when he used IEEP and it was declared illegal, no country jumped out and said, I'm going to unilaterally tear up my trade agreement with the US. I want to renegotiate. No country dares to say that now. No one dares to fire the first shot. Because everyone knows that if you dare to fire the first shot, and then after the election today, if Trump and the Republican Party win big again, then it's game over. Those countries would really be in trouble. So to some extent, everyone is leaning toward just maintaining the status quo. They don't want to go against Trump. They'd rather just keep things as they are and see what other countries, other industries, and other companies do. Are there any moves being made? If nobody does anything, then just keep things as they are. Because maintaining the status quo, no news is good news. If there's no news, that's a good thing. That's basically the kind of late-stage market situation we're in. We can continue to negotiate trade deals with the US, but don't just throw up your hands and say, oh, because this is illegal, I'm not going to negotiate with the US anymore. If that happens, you might not necessarily get a good deal. Alright, none of the countries are guaranteed to get a good deal, and that includes geopolitical risks, like with Iran and the US. Aren't they in the third round of negotiations in Geneva? During this third round, Iran's foreign minister said they've made good progress, which is pretty rare. Of course, this time they're using intermediaries to relay messages. It seems like Oman, right? Oman's foreign minister is also acting as a go-between. Both the Omani and Iranian foreign ministers said that at least there's been good progress in this third round of negotiations, at least some positive steps forward. Even though there are still some differences and disagreements between the two sides, there are actually certain areas where they've reached consensus or are close to it. So it's not like there's been no progress at all. They're planning to hold some technical talks on March 2nd, which is next Monday. So what do they mean by technical talks? It's about things like uranium enrichment, sanctions relief, whether or not to set aside the issue of missiles, and then regional matters like Iran's proxies in places such as Syria, Lebanon, the Houthis, Hamas, and so on. Do you want to restrain the actions of these groups or not? These are all issues that need to be discussed in the technical negotiations, okay? Because now it's no longer just about formal negotiations. The previous 3 rounds were more about formal negotiations. What we call formal negotiations are more political. Basically, are you willing to talk or not? Will we negotiate or fight? Will war force peace or talks? These were the previous round's issues. But for March 2nd, it's no longer about force or sanctions. That's not the case anymore. Now, it's basically like, okay, I've decided to negotiate. Both sides have agreed to negotiate. The key point now is what exactly are we going to talk about? What's on the table and how are we going to negotiate? Who's going to make concessions and to what extent? This is what you'd call technical negotiations. It's no longer about whether or not we're going to negotiate. That's settled. Now it's about how we negotiate and what we negotiate about, and that's a whole different matter. So now, what is Iran saying? Alright, so Iran might say that they're willing to limit their enrichment technology to medical uses only, and they might also promise to halt nuclear activities within an unspecified number of years. But honestly, the US is never going to agree to that. First of all, Iran claims its uranium enrichment technology is for medical purposes. But the US just isn't going to buy it. Right? And secondly, when they talk about making a promise, promising to stop nuclear activities, but they don't specify when that would actually happen, isn't that basically the same as not negotiating at all? So I really don't think the US would accept that either. As for the US, the only thing that's been reported so far is that they might allow Iran to use low-enriched uranium technology, but only if Iran completely destroys its nuclear facilities and ships all of its already produced highly enriched uranium to the US. They can't keep it in their own country, so when you ask whether Iran would agree to this, I really don't think they would. So how are they going to negotiate this? I think there are still a lot of details to work out in the future. Whether the negotiations go well or not, that's something for later. But at least after the third round of talks, with the technical negotiations coming up on March 2nd next week, I think there's at least some room for discussion, just taking it step by step. Whether the talks last 6 months, a year, or even 2 years, it doesn't really matter. As long as there are talks before this year's midterm elections, there's hope. That's basically the idea. If you're negotiating, there's a chance. If you're not, there's no chance at all. So on Iran, this is about giving Trump face, showing a willingness to negotiate. Talk duration is another story, but at least they aren't clashing directly. What about crude oil prices? Although prices are still high right now, still holding up there, that's because there's a glimmer of hope, but it's not a big one. Simply put, the reason today's title says progress from 0 to 1 is because originally it was 0, meaning I'm not negotiating, I'm going to war, I hit you, and I'm not easy to negotiate with. That's what we call 0. Now, moving from 0 to 1, it's not like moving from 0 to 50. We don't even know if that's a passing grade. It's just going from 0 to 1, meaning there's been a step forward. Taking that first step is at least something, so that's good. At least they're moving forward. That's why the original price hasn't completely dropped, because it's only one step. We'll keep watching as they go from the first step to 100 steps, and there could be a lot of room for negotiation down the line. So what about the original price? Today, it still went up by 0.81%, staying above the 200-day moving average. So let's keep an eye on Iran's negotiations scheduled for March 2nd. If those talks go well, I think there's still a chance for oil prices to drop back down to the 200-day moving average. All right, so tonight at 9:30, we'll be looking at the PPI data together as usual. But before we check out the PPI numbers, let's first take a look at something happening in the industry. Regarding this industry news, let's talk about NVIDIA. We know that their earnings report yesterday was really, really good. But if it was so good, why did the stock drop nearly 5% yesterday? To a large extent, it's because all the good news was already priced in. The market had already expected their earnings to beat expectations, and when the report actually did come out better than expected, it still ended up. Everyone thinks that since the earnings report has already beaten expectations, and that's now a fact, what we're seeing is a classic case of good news already priced in from a technical perspective. That's one reason. The second reason is that the market's bigger concern right now isn't really about whether NVIDIA's earnings are good or not. The real issue now is, to answer this question, honestly, this time around, NVIDIA's earnings report really did go from a 98 to a perfect 100. It was truly outstanding. The fourth quarter earnings beat expectations, and the forecast for the first quarter of this year also exceeded market expectations, with strong performance across the board. So it's like a student who improved from a 98 to a 100, but ended up being dragged down by his classmates. He was dragged down by other clients. What does that mean? Right now, when we talk about this big drop, we're referring to the four major CSP companies. You really need to remember these four: Amazon, Google, Microsoft, and Facebook. These are the four big CSP players. They keep buying NVIDIA's chips, constantly expanding their capital expenditures, and continuously building out data centers and infrastructure, investing a ton of money into all of this. Now, the market is worried that these four major CSP companies, the cloud service providers, the companies developing AI, have bought so many chips, or that their projected capital expenditures are going to reach $200 billion. Microsoft says it'll be at least about $120 billion, and Google is looking at $180 billion. That's a huge amount. Meta is also planning somewhere between $100 billion and $130 billion. That's a massive amount of data and investment. So if you look at the total capital expenditures of the four major CSPs this year, when you add it all up, it's going to exceed 650 billion US dollars. Now, what everyone is worried about is whether after investing so much, they can quickly recoup their money in the short term, whether they can actually make that money back. That's the main concern. But honestly, if you look at it from a practical and realistic perspective, for a company or an entire industry to invest such a huge amount of capital to bet on AI development and AI infrastructure, honestly, you're not going to see results in a short period of time. At the earliest, it might take 2 years, and at the longest, maybe even 4 to 5 years or more. Only then will you see a real significant positive cash flow coming back. After all, you have to invest so much up front. You have to put in $50 billion, $60 billion, $100 billion, even $200 billion to build everything. After you finish building over the next 2 years, then little by little, the money will start coming back. So in the short term, because people can't see the returns, investors in the market get worried. So the issue isn't really about the company itself or something the company did to its own stock price. It's that people on the outside, these investors and clients, are worried that they're putting in way too much money and won't be able to cash out in the short term. That's the reason why this answer came about. Even though things are actually going well, yesterday the stock opened high but closed lower, dropping 5%. Whoa! And then there's another piece of news. What is it? It's about the original person behind The Big Short, the real-life inspiration for the story we talk about. We're talking about the guy who, back in 2008 or during the Lehman Brothers collapse or the global financial crisis, served as the inspiration for these stories. Back then, his predictions were spot on, like Michael Burry. Michael Burry, right? He really made a name for himself, but honestly, in recent years, his calls haven't been that accurate. Still, he became famous for that one big win. Now, Michael Burry has said that NVIDIA, in order to meet the market's expectations for chip demand, has put itself in a riskier position. He's worried that if AI cools off, then their finances could take a catastrophic hit. He mentioned something, he pointed out a detail in NVIDIA's financial report. In just the past 12 months, the amount they've committed to external procurement jumped from $16 billion to nearly $100 billion. The main reason for this is TSMC. TSMC now requires longer-term contracts and higher prepayments if you want them to help manufacture chips for NVIDIA. Basically, you have to pay me up front. You need to make a prepayment. Only after I, TSMC, receive this order and the prepayment will I be willing to manufacture your next generation chips, whether it's for your Grace Blackwell or let's say the chips that come after Hopper. TSMC needs to receive the money first and see a long-term contract before they're willing to start production. If you're not willing to pay me up front, then I'll just produce for AMD, or for Google, or for Meta. That's why NVIDIA has to put up even more money in advance to secure TSMC's commitment and lock in that production capacity. Only then can they continue to develop the Hopper series chips or whatever comes next. Feynman chips all require advanced support from TSMC. The 1.6 nanometer process and so on, all of that depends on TSMC. Okay, so he paid so much money up front, and Michael Berry was worried, saying that if you pay that much in advance and then AI cools down, you won't be able to get your money back. That's true, but whether it's NVIDIA, TSMC, Google, or Meta, these companies aren't stupid. They must have seen this demand, and they must have seen such a huge opportunity and upside in the future. The orders are there, that's why they're willing to raise it from $16 billion to $95 billion. This includes the 4 major CSP companies I just mentioned, Amazon, Google, Meta, and who was it? Oh, Microsoft. They're putting in the money. They're investing $150 to $200 billion in capital expenditures. The reason they're throwing in so much money is because they've clearly seen that the demand from all the downstream suppliers is huge. So huge that it's outstripping supply. That's the only reason they're willing to invest so much and are eager to secure their footing in the AI field and the AI world. So regarding the point he brought up, I think it's half right and half still needs to be observed. Half right, half still needs to be watched. For now, it doesn't look like AI is heading toward a bubble. Over the next 1 to 2 years, I think it's still going to be. So of course, who's making the most money? Besides NVIDIA, it's TSMC. TSMC is also making the most money, because no matter which company is making the chips, they all need TSMC's advanced manufacturing processes. They won't go to Samsung, and they definitely won't go to Intel. Intel isn't even worth considering. It's always going to be TSMC. So TSMC is the biggest beneficiary, almost on par with NVIDIA. So just keep an eye on that. As for why there was such a big drop yesterday, here's what I think. NVIDIA's earnings weren't bad, as I mentioned. It's just priced in news. Plus, there's pressure from peers and clients. Short term, the stock is holding within moving averages, consolidating. It hasn't broken out or down yet. So if you're trading, since last October, the strategy is simply to range trade it. First, if the price drops down to the 200-day moving average or the blue trend line, the support levels at the lower end of the range, you can look for buying opportunities there. At the upper end of the range, you look for selling opportunities. The price swing between these 2 points is about $30, so you can trade back and forth within that range. Then, once there's a real breakout or breakdown from this range, you can reassess the trend and adjust your trades accordingly. That's enough for now. So in the short term, I just wanted to supplement what I said about NVIDIA's fundamentals and the related technical analysis. All right, UCCU2330, good evening. Right now, the market's pretty concerned about the war. Gold and crude oil prices are soaring, so let's just wait and see. Anyway, I think just like we talked about earlier regarding Iran, there have been ongoing discussions. I feel that if a war really does break out, it's unlikely to be a full-scale scorched earth war, because Trump wouldn't dare to go that far. We've reminded everyone about this over the past few days. If a full-scale scorched earth war breaks out, it would be endless, and he might as well forget about this year's election. But some minor skirmishes or even attacking Iran's flanks could be possible. There's a chance that might happen. Alright, OOVO, and what was it? Olin 2188. Good evening. So a few days ago, I also saw a news report saying that NVIDIA's short positions have reached $50 billion, right? Something about futures short positions, $50 billion or whatever. Anyway, whether there are a lot or a few short positions, everyone is definitely paying attention. Some people are bullish, some are bearish. Overall, I think, first of all, there aren't too many issues on the response side, and as for CSP companies, it doesn't look like they're heading toward an AI bubble either. From a technical perspective, just trading within this range, going up and down is enough for now. Alright, as for the lecture, it's just about 9:30 now. So, let's check if the economic data has been released yet, okay? Let's take a look at the economic data. About the data, has it just come out? Alright, Y90's good night. The data, hey, it just came out. The US January PPI month over month is at 0.5%. Oh wow, that's higher than expected, but it's the same as the previous value of 0.5%. As for the year-over-year PPI, it's only at 2.9%, which is higher than expected, but lower than the previous value. Now, for the core PPI month-over-month, it's at 0.8%. Wow, that's higher than both the forecast and the previous value, which means inflation, at least for now, seems to be It seems like most of the data is higher than expected. As for the core PPI year over year, it reached as high as 3.6%, which is significantly above both the forecast and the previous value. So looking at the data that was just released at 9:30, honestly, the chances of the Fed cutting rates have dropped sharply again. Because whether you look at the PPI month over month, year over year, or the core numbers, almost all of them are higher than expected, pretty much across the board. They're all coming in above expectations. So this means that today's US stock market will probably be affected by this to some extent, and there might be a bit more panic. Alright, so the US stock market is likely to face more pressure today as well because it looks like inflation hasn't come down. The drop in inflation isn't that significant. As for inflation, based on the data from this month, the January PPI monthly rate, it seems like there's still a slight uptick, so everyone should pay a bit of attention to that. As for tonight at 10:45 and 11 o'clock, just keep an eye on the Chicago Purchasing Managers Index and the December construction spending monthly rate. That should be enough. So for this week, the most important thing tonight was the PPI, which has already been released. Just wanted to remind everyone again. Today's PPI data came in higher than expected, which means inflation is still pretty stubborn. It's still showing a rather sticky situation. Now, moving on to what we just mentioned, let's also talk a bit about its well-behaved child. Its well-behaved child, which has switched over to this category, is called CountyWeave. It also released its financial report. Its rich dad recently fell from grace, and CoreWave couldn't escape trouble either. Fourth quarter revenue hit $1.57 billion, up 110% year over year, meeting expectations. However, its net loss reached $452 million, worse than expected, with an EPS of minus 0.89. In 2025, the net loss was $1.17 billion. The fourth quarter backlog was good, rising to $66.8 billion, quadrupling since the year's start. They secured orders, but are still losing money. As for the part where they're really trying, they're still losing money right now. So why did he say that? He said it's because they're building new data centers. This company's actually pretty interesting. What they do is specifically buy NVIDIA chips, then they buy NVIDIA chips and set up these data centers, and inside those data centers, the servers, the chips, all the infrastructure, they all use NVIDIA products. So other companies actually rent equipment from CoreWeave. Okay, that's basically how it works. You can kind of imagine what it is. It's like, for example, let's talk about something really simple. You know, Toyota, right? Toyota cars are super famous, aren't they? They're everywhere, right? You can just go out and buy a Toyota car directly, right? You can also go buy one, or you can just rent a Toyota car directly to drive. For example, if I remember correctly, doesn't Toyota also have an affiliated leasing company? In Taiwan, what's it called? Is it Irene? Or is it Geishang car rental or something? Anyway, I'm not sure if it's Irene or Geishang, but they're basically the same. Whether it's Geishang car rental or Irene, it's all the same. Behind them, their main parent companies, the big bosses, are all car manufacturers, all from the automotive industry. I think one is Toyota and the other, I'm not sure who it is. One is from Taiwan, but which one from Taiwan, I can't remember. Anyway, you all can go check it out yourselves. Take Hertz, for example. I remember it's Toyota. Toyota invested in them. So if you want to drive a Toyota, it's really easy. For example, you can drive a Camry or a Corolla or whatever else. Anyway, there are tons and tons of famous cars to choose from. You can buy big cars or just rent them. When traveling far, I'll take the train and rent a car at my destination, like using iRent. Driving from Taipei to Hualien is exhausting. The 3-hour drive through Shui Tunnel is always packed with traffic, and if you need a bathroom, it's a huge hassle. On the Suha Highway, the winding mountain roads are a pain. You're constantly worried about falling rocks, earthquakes, and cliffs, even though the scenery is amazing. But you have to drive for such a long time, and you're worried about getting carsick. So after a whole trip like that, driving from Taipei to Hualien takes over 3 hours. That's why usually I'll just take the train to Hualien. Once I get to Hualien, I'll rent a car there. Actually, Heryen car rental is pretty good, thanks to 5311A3 and Yulon Motors, which is actually Hatai Leasing for Toyota. So if you don't want to buy a car or deal with the hassle of owning one, you can just rent instead. That's what I do. It's the same concept, just like with their chips, all their chips and their data centers, you can also lease them. But who actually provides those chips? So to answer that, regarding the investment in CoreWeave, I have to report how much was invested. Was it 800 million or 1 billion US dollars? I can't remember the exact amount because sometimes the numbers fluctuate and they're increasing. So during COVID, in order to build this data center, the company invested a huge amount, taking on this massive cost to set it up. That's why he said their profit in the fourth quarter and for the whole year ended up being a loss of 1.1 billion. This explains the $1.7 billion loss. First quarter revenue also missed expectations, coming in under $2 billion. Despite a strong 2026 revenue outlook, CapEx is rising to between $30 and $35 billion. While positive, they're still losing money, and first quarter revenue is lagging. Plus, they have their rich parent backing them. Just think about it. If Aeon's own performance is already falling short of expectations, and then its parent company, whether that's Toyota or Yulon Motors, also isn't doing well, do you really think it can escape unscathed? It's pretty unlikely, right? That's why there's a lot of pressure in pre-market trading today. Yesterday, the stock only dipped slightly by about 0.4 or 0.39%. So looking at the overall trend right now, I still think it's relatively weak. From last June up until now, it's been over 9 months. The pattern has pretty much been lower highs, and lower lows, which is still a sign of weakness. So in the short term, after all this volatility and consolidation, things might stabilize a bit. When their revenue and profits really start to show steady improvement, that's when there might be a better chance for the stock price to perform, especially since its rich dad, and by that I mean its parent company, recently, as I've mentioned, some of its peers and clients have had some issues. There's pressure to cash out, so the market isn't as optimistic about large-scale capital expenditures in AI. So if people aren't optimistic about its parent company and have higher expectations for it, then naturally the pressure on its investments, like this code, will also be greater. That's something I wanted to add for everyone. Lastly, let me mention the situation with the wedding crasher. This is like someone suddenly showing up halfway through. Here, the wedding crasher refers to the Warner Brothers merger case. Originally, the acquisition was going smoothly, with Netflix and Warner Brothers having good talks. Everything seemed to be going well, like a nice date. But then, when they got home, they started to feel something was off. Why? Because Warner Brothers suddenly had another suitor, Paramount. So what about Paramount? Actually, back in December of last year, Netflix had already made an offer of $27.75 per share. Then, just a few days later, on December 8th, Paramount came in with an offer of $30 per share, making the total value of the acquisition $108.4 billion. Alright, so previously, Netflix had offered $82.7 billion, but Paramount bumped it up by almost 20%, bringing it close to $110 billion. This whole thing has been under negotiation for quite a while. Over the past month or two, they've been going back and forth. Finally, today, it seems settled. Paramount has made this offer, and the amount is even higher, pushing the stock price up to $31 per share. Also, regarding things like regulatory approval, if, say, the government regulators don't approve the merger, Paramount has even proposed a breakup fee of $7 billion. And yes, that's all in US dollars, a huge amount. Paramount even told Warner Brothers, listen, if you're willing to break up with Netflix, if you don't want to be with them, if you split up, I'll pay you a breakup fee. Sounds pretty good, right? A breakup fee of $2.8 billion. And then they said, by this September, I'll marry you. Now, from now until September, that's only about 7 months left. By this September, I guarantee the deal will go through. I'll definitely marry you. And if I don't, for every quarter that passes, I'll pay you 25 cents per share as a late fee. So that's why he offered these incentives. Honestly, let's put it this way. If you're a really beautiful girl and you're looking for a husband by tossing a bouquet, some of the suitors who show up might be pretty good. They might have high degrees, good salaries, and solid family backgrounds. Then suddenly one guy comes out and tells you, my dad is Terry Gou, my dad is the owner of Oracle. Well, that would make you hesitate, right? You'd be tempted. Why do I mention the owner of Oracle? Because Paramount CEO is David Ellison. We've talked about David Ellison before. What is he? The founder of Oracle, Larry Ellison's son. Larry Ellison is the founder of Oracle, and his son is David Ellison, who just happens to be the CEO of Paramount. So why do I say this has something to do with Trump's election? Why is it that, honestly, whether Warner Brothers merges with Paramount or with Netflix, this is already tied up with political overtones? Once a merger involves political motives, it's never that simple. Let me say it again. When a partnership is driven by political motives, it's never that straightforward. So Netflix, he said, Paramount bid $31, but Netflix backed out. They're done. This is actually a smart move for Netflix. Why? Because if they went head to head, you just can't beat the House. Ordinary people can't win against the authorities. They can't beat Trump's administration because the government will use all kinds of policies to block them. What's the deal with the Warner Brothers and Netflix merger? Antitrust laws, anti-monopoly regulations, and all sorts of rules will be used to prevent Warner Brothers and Netflix from merging. That's always how it goes with collaborations like this. So why do I say this is a political consideration? Like I just mentioned, isn't the CEO of Paramount named David Allison? Isn't his dad from Oracle? The CEO and founder of Oracle is pretty close to Trump. He leans more toward Trump. So why is Paramount in such a hurry to buy Warner Brothers? Why? It's definitely not because of things like DC Comics, HBO, or the Discovery Channel under Warner Brothers. That's not the main reason. The real reason Paramount is jumping in right now, and why Oracle is willing to back them financially, is something else entirely. Why go for a merger and acquisition? Because Warner Brothers owns a very important news media outlet called CNN, and CNN often writes negative things about Trump. CNN and Trump just don't get along, so Trump basically sees CNN as an enemy. So when Warner Brothers sought a merger, AT&T quickly jumped in, offering $110 billion. They were determined to close the deal. So this was really just a political consideration. So let's say if Paramount really wanted to do the same thing as Warner Brothers, it would definitely be legal and compliant, because under the Trump administration, he would make sure all these regulations would get passed, no problem at all. If it were Netflix trying to do this, none of it would get approved. But if it's Paramount or Warner Brothers, everything would go through. And once it's approved, of course, CNN would belong to Paramount, so they wouldn't be writing all sorts of weird stuff during the election to influence Trump's campaign. So that's why Paramount is in such a hurry to acquire Warner Brothers. This is a big part of their reasoning, probably 80 to 90% of it. It's all about the election, about Trump's media prospects. It's that simple. So I think Netflix deciding not to play along and pulling out is actually a good thing. It's better for them. They don't have to spend so much money. They can just look for other opportunities for strategic partnerships later. So pulling out is the right move. It might not necessarily be good or bad for their stock price. And as for Paramount, acquiring Warner Brothers is also a good thing. For Paramount, it's a positive move. Why? Because they found a great strategic partner, which will allow their entire video and media business to keep thriving. This is a plus for Paramount, and it's not necessarily bad news for Netflix either. So is it ultimately a good thing for Warner Brothers? Well, for Warner Brothers, we can only say, anyway, they're going to be sold, right? If you're getting sold and about to be taken off the shelves and handed over to Paramount, then just go ahead and do it. So in the end, $31 is fine. The current stock price is only about $28, so if it goes up to $31, I think that's about as high as it'll get, just because the acquisition price is set that high. It's hard for it to go much higher, but I also don't think it'll drop much either. That's basically the idea. So regarding this Warner Brothers merger, let me add that political considerations are extremely important. Okay, someone by the seaside asked about Tybo and whether it will go up next week after the parliamentary session. Honestly, I don't know if it'll rise next week. Well, anyway, let's just see how the market does next week. Next week might have a bigger impact on the Taiwan stock market, since there was quite a bit of volatility yesterday, especially with AI stocks. As for Tybo, it does have some AI components in its business, particularly in the high-end segment. The narrow boards and other parts of the business as well, so whether the market will go up next week, I really don't know. Anyway, let's just keep an eye on the overall market. Okay, will CNN disappear then? Alvin Chan, will CNN disappear? I don't think CNN will disappear. CNN won't disappear. But the person in charge of CNN will change. The leadership will change. What that means is, with new leadership, the content and material in their media won't focus on writing negative things about Trump anymore. You get what I mean, right? Actually, it's the same all over the world. The governments, the political parties, the military, the media, they're all the same everywhere. Taiwan is no exception. It's all the same. Don't just say it's the US or that it's only the Republican or Democratic parties. It's the same for everyone. Whoever gets elected, whoever is in power, their media will try to bring the government, the party, and the media all under their own control as much as possible. That's just how it is. In Taiwan, it's the same, whether it's the DPP or the KMT. Whoever is in power, you can imagine what their media will be like, will always lean toward the ruling party. That's just how it is. That's the way it works, because otherwise, how would you win an election? It would be really hard to win. Oh, so CNN, it's not going to disappear. It won't disappear, but the things that come out in the media might just be different, just not the same anymore. Okay, about Pokemon. Pokemon at that time, Fissen's outlook, Fissen was still leaning more toward volatility. In the short term, it was still expected to be volatile. I remember, I think it was Thursday. Yeah, I think a student also asked about Fissen on Thursday. Okay, Phison is also related to Netflix. Anyway, in the short term, it's still relatively volatile at a high level. As for whether it will go up further, you can look at the first round of related price quotes. For example, if you look at Nanya Technology and Atera or Winbond, if Winbond and Nanya keep going up, and then Samsung and SK Hynix also keep rising, if that's the case, I think this group, including Phison, will more or less be driven up as well. So for the whole year, companies like Transcend or AData will also have a chance to be driven up. But in the short term, it's more of a high-level fluctuation. Yeah, more of a high-level fluctuation. Paramount's American dramas are really good to watch. Yeah, they're pretty good actually. I think Netflix's shows are also quite good. Internal analysis shows insights. Lastly, Dell's earnings report was notably good. Q4 revenue, profits, and orders were strong, and AI sales are booming. $9.5 billion with a $43 billion backlog. Infrastructure hit $19.6 billion, up 70 to 73% year over year. Like Nvidia, they're seeing huge growth, but people don't scrutinize Dell as closely. Because it's different, right? The most popular ones in the market are probably Nvidia or maybe TSMC, so everyone examines their financial reports with a magnifying glass. But as long as you're not, let's say, too hot and you're not number one, but you quietly keep making money and making a lot of it, then the market won't scrutinize you so closely. For example, take Nvidia. It's like a top student, so if a top student scores 98 or 100, that's just expected. Sorry, I almost said the wrong thing. Pokemon, not Mangpo soup. Thanks for catching that. Take Dell Computers, for instance. They're also making good money, really good money, but because he's more like an average student. Not a top student, not at the very front of the class, but still doing pretty well. Let's say he's in the top 10, a good student among the top 10. Now, if he moves up from 10th place to 5th, everyone will have high hopes for him and praise him a lot. That's the idea here. So, with Dell Computers, their fourth quarter revenue and financial reports were solid, and their first quarter outlook is also in line with market expectations. They earned $2.90 per share, with revenue close to $35 billion. The full-year revenue for 2026 and the EPS outlook are both better than expected, and they're also planning to expand their stock buyback by $10 billion because of this. He's a solid performer, which is why he brought up the computer. The stock surged in today's US pre-market after dropping 1.64% yesterday. Technically, watch this blue trend line. If it stays above this neckline area, there's no worry. Just keep holding. Also, see if it can get back above the 260-day moving average today. If it opens well, it could get back above the 260-day moving average. Today, the 260-day moving average, the 200-day moving average for the year, is still trending upwards, so that's pretty good. If it can hold above the 200-day moving average, then there's still a chance for it to keep climbing higher, because the earnings report was excellent. Since the performance was so strong, the magnifying glass part won't be used on Dell Computers. It'll be used elsewhere, like on AI. So what does that mean for Dell Computers? It passed, so today looks good. For the US pre-market, Block Inc. is up after strong earnings, showing significant growth. The increase reached as high as 20%. As for Dell Technologies, it was up 11% in pre-market trading. Just like I mentioned earlier, their earnings report was really solid. Now Netflix, even though their attempt to acquire Warner Brothers failed, it's still okay. After all, you can't fight City Hall, so stepping away from this political game is actually a plus for them in my opinion. So Netflix was up 8% in pre-market trading. Paramount, thanks to the successful acquisition story, also rose 7.3% pre-market. And then there are companies like Autodesk or Occidental Petroleum and some other energy companies like Devon Energy or Diamondback Energy and so on. In pre-market trading on the US stock market, there were also about 1% gains for companies like Chevron, and ConocoPhillips was up around 0.6% as well. Now, as for the companies that dropped, Workday fell 3.69% in pre-market trading, Intuitive Surgical, Capital One, and Carnival, and even companies like SanDisk all dropped between 2.5 and 3%. Oracle and Salesforce were both down 2.3%, and even Broadcom and Warner Brothers saw declines. So, looking at the overall picture today, Aside from the computer companies boosted by positive earnings reports, and the ones I just mentioned with merger and acquisition news, and even some energy stocks that went up, most of the companies that dropped were from the tech sector. So when you're trading in the US stock market today, keep that in mind. You still need to be a bit cautious. It's better to pause and observe, okay? Because most of the companies that dropped today are related to AI, software, or information technology stocks, which puts more pressure on the NASDAQ index. The pressure there is relatively heavier. Looking at the four major indexes right now, the Dow Jones is still pretty strong, and the Philadelphia Semiconductor Index is still holding above the monthly moving average, which is quite good. The S&P is above its moving average. Of the four major indexes, the NASDAQ looks technically weakest as its downward curving moving average adds pressure. Meanwhile, the Dow is fine, and semiconductors remain strong. Then the S&P 500 is flat, but the NASDAQ is relatively weak, so for tech stocks, you should pay a bit more attention in the short term. There might be some volatility, and this adjustment period could last a bit longer. But it's not like the market has turned bearish or entered a long-term downtrend, so don't scare yourself unnecessarily. This means consolidation will take longer. The Dow edged up 0.03% yesterday, staying above key moving averages. As mentioned, the SOX index dropped 3%. Nvidia and TSMC both fell. But looking at this long black candle, despite the sharp drop, the monthly moving average surprisingly held. Surprisingly, the monthly average is holding, and both monthly and quarterly patterns remain bullish. We must see if these averages hold over the next few days. If they do, the SOX index structure should remain bullish. Also, if support holds, the impact will be minor. However, the Magnificent 7 fell another 1.52% yesterday, with the 20 and 50-day averages now acting as resistance. So going forward, keep an eye on this upward trend line, the blue one, and see if the 200-day moving average can continue to hold as support. If it does, then it's really not a big deal. However, even if there's a rebound, both the monthly and quarterly moving averages will act as short-term resistance overhead. This will put pressure on the Magnificent 7 index. In terms of performance, it's likely to show a more suppressed effect, kind of pressure. So when observing both the index and individual stocks, I've analyzed and tracked a lot of details for everyone, hoping that your investment journey will become more and more stable. Alright, that's all for the group-related content. Before the US stock market opens, I'm providing you with the latest updates. When class is over, remember to like, subscribe, and share for us. Also, thank you all for joining online to chat about the market today, even during the February 27th and February 28th consecutive holidays. Thanks for listening to my ramblings. If you have any investment questions, feel free to leave me a comment. Wishing everyone smooth trading, and I'll see you next week.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.